Welcome to the Slop Farm. Enjoy the video.
In this video, I will explain how to read Schedule K-1. This essential tax document details your share of a pass-through entity's income, losses, and deductions. You'll receive a K-1 if you're a partner in a partnership or a shareholder in an S-corporation. Understanding its contents is vital for correctly reporting your earnings and deductions on your personal tax return, such as Form 1040. Let's break down the K-1 into its main sections. Part 1 provides details about the entity itself, including its name and identification number. Part 2 focuses on you, the recipient, showing your name, address, and ownership percentage. Finally, Part 3 is the core, presenting your allocated share of the entity's financial activities, which you'll use for your tax forms. Now let's look at some common items you'll find in Part 3. Box 1 often contains your share of the entity's ordinary business income or loss. If you're a partner receiving guaranteed payments, check Box 4. Interest income is usually in Box 5. For charitable contributions, look for Box 13, Code C. These figures directly impact your personal tax liability. Once you've understood your K-1, you'll use its information to complete your personal tax return. Many amounts will transfer directly to specific lines on your Form 1040 or related schedules. Remember to consider your basis in the entity, as this can limit deductible losses. If your K-1 is complex or you have questions, seeking advice from a qualified tax professional is always a wise decision.
Thanks for watching. Consider subscribing if we helped you today.